Good morning, Oracles. Well, yesterday didn't turn out to be anywhere near what we wanted it to be. However, it was kind of what we expected it to be. We discussed how prior to the CPI data that we're getting today, probably going to see some red in the market. We started pre-market very low, had a little bit of a bump early in the morning, and then continued to sell back down and closed down almost 5%. And now the entire market was down. 10-year treasury yields were going up. We've got Shanghai has continued to be closed. We've got tax season is going to be ending this Friday. So people are selling off some stocks in order to get money to pay off their taxes. Lots of different things that are going on in the macro environment that are bringing the stock down, and then the Shanghai plant being closed even longer is causing extra FUD on top of this for Tesla. And so for me, I see this as a great buying opportunity. Not an opportunity where I'm going to dump all of my money in. I'm still seeing the sentiment in the macro environment, completely ignoring anything having to do with Tesla, driving it all down, and then the Shanghai stuff that's going on with Tesla is just going to bring it down even further. So for me, this is a great buying opportunity because we are going to come back up. And when I look at the different things and seeing through all of this, I see the numbers that came out of China. And China delivered 65,000 vehicles for the month of March, and most of those were in retail in their country themselves. They only exported 60 vehicles. This is typical for what Tesla does in a quarter, usually the last month, just so they can keep numbers of deliveries higher. They do everything locally just because it's faster to deliver locally than it is to ship it across the world. And of those 65,000, nearly 40,000 of them were Model Ys and 26,000 of them were Model 3s. So this is going back to the point where we know that Model Y is becoming more popular than the Model 3, and Elon stated that he believes the Model Y is going to be the best-selling vehicle in the world in 2023. So this here is just showing the direction that they are on to show that they are heading in that direction. They are producing more Model Ys. This is why Berlin and Austin are starting with the Model Y. Obviously, in order to become the best-selling vehicle in the world, you need to produce enough of them. So this is what they are working on. This is where their mass scale focus is for this year. And they are proving it in China. And so production for March for China was 55,500 vehicles, which you gotta remember, they were down for 6 days due to COVID, and that's about 10 to 15,000 vehicles that they were missing in production because they're producing about 2,500 vehicles per day there. So thinking about if you add on 10 to 15,000, you're looking at 65 to 70,000 vehicles produced in March. A great number. Obviously, this is not a good thing because they were closed, but we know that it is a one-time, one-off deal because this is not going to be an extended situation. Now, we are getting mixed reports out of China of how long is it going to be before they open, and I'm hearing rumors of, 40% of the city is coming out of lockdown. We're getting some good news of, some areas do not have COVID. They're, no cases, so they're able to lift restrictions. So we do not have any confirmed information as to whether this is going to be good for Shanghai, the factory, if it's going to be opening or not. Still don't have any actual information on dates yet. Last information we knew was the 18th, which is going to be next Monday of them reopening. Again, we will stay tuned to hear what they have to say out of Shanghai. And so knowing that they are producing 2,500 vehicles per day out of Shanghai, Berlin and Austin are not to that ramp speed yet to make up for it. So we only have numbers coming out of Berlin. I've heard numbers anywhere from 250 per week to 500 per week. Somebody said 5,000 per week, but I think that is really high, so I don't know how true that is. And we don't really have any numbers coming out of Austin yet at all. So I don't think that either one of those factories are to the point where they can compensate for the downtime in Shanghai. The other problem we have is when Shanghai does reopen, it's not like they're going to be able to turn the switch back on and go back to 2,500 vehicles per day. They're going to have to go through an accelerated ramp phase to get themselves back up there. So it's still going to take a little bit, but they will get back there. So that's going to really determine what we're looking at for Q2 numbers when it comes to production. So now looking at the stock price and how it's being affected by all of this information that's going on, we have now seen another massive gap down. We had about a 4% gap down to start the day today in Tesla. We recovered a little bit, but did not fill that gap. So this is now our third gap down that we have to fill going back up. And we did fill that 10-10 gap on the way back down in the middle of this gap. So there's basically a gap in the same direction up and down right now for Tesla, just over $1,000. So lots of gaps to get filled, and I'm still looking at the sentiment in the macro environment. We've got the FOMC meeting on the 4th and 5th of May. We do have earnings, so I think we might see a little bit of a pop-up between now and the 4th and 5th, but I think it's going to be a very short-lived pop-up. Not to spread any FUD or be negative, but just being realistic, knowing that we are following a very similar pattern to what we saw for the first 3 months of the year. I think we're going through a very similar pattern right now. So this again is a wonderful time to pay attention to the fundamentals of Tesla. And yes, Shanghai is closed, but what did they produce while they were open? Production numbers are outstanding. So we are still moving in the right direction, doing very well. We just had Berlin and Austin come online, very good for fundamentals. We're going to get our Q1 earnings call and see the numbers there. That's going to be great for fundamentals. We have the split coming up, great for fundamentals. So just remember, as we are coming down in this downward trend, we have amazing fundamentals to back us up. And for any of you who bought into Tesla during the last dip that we just had, you know full well we are going to turn around very quickly to come out of this, and your investments that you make during this time of a downtrend are going to be magnified that much greater when we come out. And so the levels that I am paying attention to as we are on this downtrend are 950, because it's a psychological support that we bounced off of a few times last time. I actually, because of how much we fell today, I put an alert for 925 because I want to buy in around 925, and we have that gap to fill down to 905. So for me, between 905 or 900 and 925, I will probably be buying a little bit heavier in my main portfolio, and I will add a share to my IRA. The next level I'm looking at is again 900 and then down to 850. Whether we fill that gap down to 801 or not, I think is going to we'll have to see how the macro environment trades, because this trading for Tesla doesn't have a lot to do with Tesla. The majority of it is because the macro environment is swinging the way it is. So if we get a lot of extra FUD over the next month, we might come down and fill that 801 gap. Again, not spreading FUD, just being realistic. And actually, for me, that would be awesome, because that is the next point I will be buying in. If we drop below 850, I will be adding another share to my IRA and adding even heavier to my main portfolio. So again, not spreading FUD on this, I'm actually looking at this as a great opportunity if we come down, because realistically, we are heading in that direction. Again, we don't know how far we're going to fall. This is why I dollar cost average on a daily basis and add more the more we fall. And so for any of you who have been following along, you know that I have been saving up cash. You know that I have been selling off unwanted stocks to build up more cash reserves just for this situation in particular, because I saw it coming and I wanted to be ready for it. And so now here we come, and I'm still going to continue to add cash as we drop. I'll add a little bit, but add cash as well, sell off anything I can, and I'm just going to get myself ready for some amazing fudge buying opportunities. And for anyone who is new to the channel, fudge is when there is fear, uncertainty, and doubt, grab extra. Because that's what this is all about, playing that swing. For those of you who are going to get, paper hands, or you're afraid and you're like, oh, and you see your stocks going red, it's okay. You want to take your emotions out of this and go in the opposite direction. When you feel like selling, buy. Do that. Buying things makes a lot of people feel better. So just spend money. If you don't have the money, or maybe you were not prepared, I've been there many a times in the past where I've seen great buying opportunities and I couldn't buy because I didn't have the cash reserves. That's why I have learned fudge. Because for me, when we get into these opportunities where I'm feeling like, oh man, why is my portfolio so down? I buy more. it makes me feel better to buy more. I'm basically buying Tesla stock on sale, and we are about to get some amazing fire sales coming out of this. And again, for those of you who do not have the cash reserves, or maybe you don't have enough to buy, full shares because you live in different parts of the world who can't buy fractional shares, remind yourself of this. One, we've got a split coming up, so in the future you'll be able to buy more for a lot less. And two, just hold. If you are in this as a long-term investor, you're going to be just fine. Because if you sell now, you're not going to have the cash. Yes, sure, we can fall a lot further. Maybe selling out at $9.75, you'll have an opportunity to buy back in a lot lower. But do you want to take that chance? It's up to you. Only you can make that decision. I'm not a financial advisor, so I can't advise you on your own personal portfolio. You've got to make that decision for yourself. For me, I'm not willing to take that risk. I am just going to dollar cost average my way down. And if I run out of money like I did last time, I'll just sit and wait. And I will just wait until the stock turns around because I know it will. So let me know in the comments below. How many of you are out there buying some Tesla fudge today? And how much did you buy? How much further do you think we're going to fall? And do you think we're going to see some more amazing fudge fire sales for Tesla coming up? Thank you so much for watching. I appreciate all of your support and feedback. If you have not subscribed, please do so down below. Sign yourself up for notifications. I am over on Twitter at OracleTim1. I share all of the latest Tesla news, pertinent stock market information, and all of my daily trades. Thank you so much. Have a great one.